and Instagram, friends, family, and future clients. Tamika Henry here, your real estate tutor, and I am at Sweat Realty Group in Carrollton, Virginia, and we have a special guest with us here today. His name is Mike Murray.
Tell me about special.
And he is from OVM Financial. Welcome, Mike.
Thanks for having me.
Yes. Tell us a little bit about yourself and what you do.
Like you said, I'm with OVM Financial. We are licensed from Virginia all the way down to Florida. Been with the company for going on 3.5 years, which is weird because I got in this business very green, just like most buyers are.
Okay.
Which is kind of pretty cool that we're doing this because I think knowledge about the mortgage industry is just not taught as much as it should be, and a lot of buyers don't really understand the ins and outs of what a mortgage is, how it works, what you need, and just being knowledgeable on the subject before getting into it. A lot of them don't. So I'm glad we're doing this. But
Okay.
just a little bit about me. I played basketball in college. Grew up in Norfolk, and I'm just I like to have fun. So whether that's with the process, whether that's us just talking, I'm very very outgoing and I try to make everybody at ease. So
Okay.
that's along with the process too. So
Good. So here you have a human being is on the other side of the phone, or didn't send that email out, and he is ready to answer your questions. So Mike, I invited you here today to talk about the 5 different types of loans. Now, when you first came to the office, I didn't know it was 5 different types of loan. I didn't even know the name of a loan. So a lot of people say, you know what, I don't know if my credit is good. Previously, I talked about how to keep up with your credit score. So with that in mind, tell us, we're going to start with the FHA and conventional loans.
Okay.
They're kind of the most popular known, more well-known loan types. So what kind of credit score do you need? What are the qualifications for the conventional loan?
Conventional loan, 660 is the minimum credit score. And when I say credit score, don't get that confused with just your highest score. So I think a lot of buyers don't understand that there's 3 bureaus within the credit scores. Obviously got Experian, TransUnion, Equifax. And each lender, we qualify you based on the median of that.
Okay.
So if somebody has a 630 and a 680 and let's just say a 690, then the 680 would be their qualifying score. Because you get a lot of time buyers, they say, hey, my credit score is this, and they're going off one score that they may be using through Credit Karma or whatever that looks like, and then I pull it and it's probably 20 to 30 points lower, and they're like, well, Mr. Murray, what the heck is going on? Or they get on me, and I'm just like, wait, hold on. This is the reason. Yeah, this is the reason why we're doing. This is how we come up with the qualifying. So 660 is the minimum on conventionals.
Okay.
Just a little more knowledge on that is when you're close to those minimums, as far as what the minimum criteria for that specific loan, especially conventional, then you probably going to have higher premium mortgage insurance.
So PMI.
PMI. Yep,
Okay, that's a very popular term.
PMI.
PMI.
So take that into considerations. A lot of lenders sometimes just tell you the bare minimum, but they don't tell you the side effect of having that bare minimum. They're just like, hey, 660, I can get you approved.
I got a 660.
Yeah, let's work. And you can do it, but again, like I told you before, I like to give people knowledge on the whole process of what that looks like. So if you have a 680, 700 credit score, trying to go conventional, now your PMI is lower monthly payments, better interest rate, XYZ.
Okay. That's some good information. So PMI is a lot of people. That's a foreign language to a lot of people.
So much.
Yes. They're like, what's that?
Yeah.
My wife has that.
Yeah.
And by the way, if you guys have any questions that you want to let us know, feel free. And Tanya will ask them as we go. So as we go along and you have a question that pops up, feel free to ask it. And Mike,
don't be shy. Please don't be shy. It's your time to learn. And whether you're ready to buy a house or you still just got some burning desires out there, don't be shy because it's the time to ask. This is free knowledge, is what they call it.
It is. Yeah. You guys are getting some good information here. So we just talked about conventional loan. Another popular loan is the FHA. and that is not a sorority or fraternity. It is a loan, people. So let's talk about that. Tell us a little bit more about that.
So FHA is probably the most common worldwide loan. It's the 3.5% minimum down payment. So a lot of buyers who they think, oh, well, I gotta have 20%. I have to have 20%. I have to have 20% down for a down payment. It's that's not necessarily the case. If you go FHA, the minimum is 3.5%.
That's huge.
The credit score minimum is 620, although you can get approved at lower credit scores. Again, when you're floating around that minimum, there's other things along the loan that you have to have. You're talking debt to income ratio. You're talking payment history, whether it's a condo or it's not. Like those things go into a factor of the loan or what you need to have for that loan. So let's just take a scenario, somebody who has a 620 credit score.
Okay, they're just sliding on.
Just sliding by and we're like, well, hey, look, you told me that's my minimum. I'm like, all right, well, good. But then let's just say they have some, a couple of lates on their payments, on their credit history.
Okay.
And they have just the 3.5% for the down payment, but no reserves. Now that file looks not as strong because they have the bare minimum credit score, and then the other things that involve a loan aren't there. So if you have that minimum, you want to have more reserves, more assets, a smaller percentage on a debt to income ratio, because that helps out. That makes up for that 620 credit score, if that makes any sense.
Okay.
And another thing about FHA, unlike, and I know we talked about PMI for conventional.
Okay.
I'm gonna hop back. So for the conventional, the PMI is lifted after you have 20% equity. So just I put a pin in the FHA real quick, and I don't think I covered it. With conventional, you can do 5%, 10%, 15%, or 20% down payment.
Okay.
Okay. For somebody who's just trying to do the bare minimum of 5%, they have the PMI on their loan up until they reach 20% loan to value, which means 20%, basically the 20% that somebody will put down on the house.
So the PMI will drop off.
PMI will drop off.
Okay.
So if somebody doesn't want that PMI on the conventional, they just put 20% down. They don't have the PMI.
And the FHA, the PMI.
The FHA, the PMI stays up there for the life of the loan. Doesn't go anywhere. That's an important one because FHA, all the mortgage insurance is for the insurer, the lender, that hey, if this person were to default on the house, this is our way of saying, hey, we insure that loan will pay X amount of that back.
Okay.
And within conventional, also want to mention there's another unique loan, what's called a Home Ready program. And what that is how I said the conventional is 5, 10, 15, 20%. This product is suited towards people who have great credit scores but may not have the 5% down payment ready. They can do a 3% down.
Oh, but you have to have a.
You gotta have a
little bit more
credit score.
Bare minimum.
Bare minimum.
A lot of people think they're playing baseball. Just slide in there,
Yeah, so it's a really unique loan because, as we all can attest, that there's people out there who aren't ready to buy, but there's people out there who are but don't have the funds. Everybody's situation is different, and this is just another kind of spinoff on the conventional loan to allow people who may not have the funds to put a whole 5% or 10% down, but have some funds, to kind of reward them and say, hey, you got great credit scores, and I know you don't have the 5%, but here's, we can do a 3% option. Okay. So, but going back to FHA, like I said, 620 is minimum. You can get approved lower than 620, but you gotta have other things up and other things that kind of make up for that.
Okay.
So.
Okay. All right. So, just that bare minimum credit score. You gotta have the recipe. You gotta have.
That's a good way to put it. You gotta have the recipe. I know a lot of people.
You gotta have more flour than sugar. You can't have more sugar than flour.
That's exactly right.
You can make a cake, but it might not taste that good.
Yeah, it may not taste. Not a lot of people gonna be eating from that cake.
No. So
that's important though, because a lot of people, they see these flyers and they see these advertisements of, hey, 580. oh man, I got a 580, let's go get approved. And again, what we said in the beginning, just not knowledgeable on the full spectrum of what it takes to get qualified for a house.
Yeah.
It's not hard, but it's definitely not, I mean, it's not easy, but it's definitely not as hard as most people think it is.
Yeah. And so, before we move on to our next loan, just really quick, can you just let people know a little bit more about credit with as far as if you're at that 620, what can you do to just really quick to get that credit score up?
There's a lot of
like
things.
Maybe three. Just give us three things to get your credit score up.
Mm.
There are three main things.
So the main things I see would be removing late payments,
Okay.
getting late payments removed, whether that's a collection, whether that's off your credit card. 9 times out of 10, you can call the creditor and say, hey, look, just tell them your story. Hey, I'm sorry. I know I've been late a couple of times and just trying to work on my credit and get approved for mortgage. If I pay this off, or if I pay the agreed amount to remove these lates, can you do that? And sometimes they will, sometimes they won't.
Okay.
But late payments are one of the biggest things that really kills credit scores.
Okay. So it's not hopeless. You can call and
there's a lot of hope there. Or work with a credit specialist or something like that. Yeah. Like there's options out there. It's just you can't be sensitive to the word no.
Right.
You just gotta keep going and pressing through. Yeah, I mean, and I always tell buyers that it's like trust with credit. It can take a day to ruin, but it takes a good little while to get back. But it is that part where you can still get it back. Another thing is credit card balance. So a lot of people have high credit balances on the credit cards, and trying to get that under that 10%, paying that balance down to 10%, and then working on there. That helps a lot as well. Obviously, the higher the balance, it take you a little longer to get that balance down, but that's something as well.
Debt to income ratio.
Not necessarily. It's debt to income ratio is more so talking about your monthly debt.
Okay.
So you can have a $15,000 credit card balance, but if your monthly payments are only $200, that's not a big deal. But when, let's just say you take that same scenario, you got a $15,000 credit balance and your monthly payment is $500. Now your debt to income ratio is higher because you got more debt per month.
Okay.
So the ratio, the formula for that is your monthly debt that's on your credit report as far as your monthly payment plus whatever your mortgage is going to be in relation to your monthly income.
Okay.
So that kind of puts it in like, all right, well, because I get a lot of people who are saying, hey, I know I can afford this house because they're like, I only got this and I got this much, but there's guidelines in play that you have to have a specific debt to income ratio per loan type, and once you go over that, that's our way to keep the market within balance and not giving people, it's the ability to repay is what it's called. It's just at a certain point you pass that threshold, and it's all about trying to see what we can do to get it back down there.
Got you. Now I know I got a little bit off topic. We're talking about loans, but you can't talk about loans without kind of sliding that credit in there. But we're going to go ahead and move on to our credit. Now this is a big military town.
Huge.
A huge military influence here. And I do want to say thank you to all of our military.
Same.
Yep, our military, our soldiers that are protecting us and doing everything they can to keep this country the way free for us, and not just the soldiers, but their families. That's important also. And thank you to all our vets who has already served in our military, and sometimes they continue to serve.
Continue to go back. Yeah. Can't get enough.
Yeah. So with that in mind, let's talk about the VA loan. Now, I have a VA loan. My husband and I have a VA loan. It's a great loan to have. So tell us, how can our military families benefit from the VA loan?
In my opinion, VA loan is the best loan. Especially, like you said, it's rewarding our veterans who put their life on the line for us to do these things and to just, walk around, in this world differently than most people around the world. But it's 0% down payment minimum. You're not required to put a down payment. credit score minimum is 600. Again, we talked about being around that minimum. You know, I know a lot of people advertise the 580s and the so forth now. And for me and how I like to do business, I give knowledge. So, you know, if you have that 580, you know, now your interest rate higher. Now, you know, things go into play that really kind of knocks you back down. And for me, I like to set my buyers up in a way after they close that they can still be beneficial throughout everything else. But VA loans, it's, you know, they're like I said, 600 minimum, 0% down payment. And a really cool feature about the VA loan is when you're talking about negotiating on your side as an agent, you can use up to you can ask for up to 6% of closing costs to be paid for by the seller.
Okay.
On top of that, you can ask for another 4% to do debt pay down.
What's that?
So what that means is, in a situation what we're just talking about with debt to income ratios. So let's just say we got a buyer who has the credit score, who has the funds, but their debt to income ratio is, let's just say 65%. I'm gonna just throw that number out, right? And we're trying to get them down to like 50. And they have 3 loans that, you know, are making them pay $300 a month. Well, if we get the seller to pay for all the closing costs, and we get them to pay an additional amount to help get that the debt down, and then we get rid of those $300 payments, and now the buyer qualifies.
Okay.
You can do that.
Okay.
Or in another situation, lease breaks. You can you can ask, because, you know, buyers, I mean, VA buyers, they have to be able to break their lease because they may be getting shipped out and so forth. So there's different options in the VA loan that you can do that you can't do with other loans. Like FHA, you can ask, I think, 4 or 5%, but you can't do debt pay down.
Okay. Can't do debt pay down with commission? No. Okay.
Nope.
Okay.
So that's a very unique one, and I mean, I think a lot of it is just beneficial to the veteran.
It is.
Yeah, it's just benefiting towards them. Then, you know, just give, I guess, a little thank you. Just a little thank you.
Yeah,
so.
that's a big thank you.
Yeah.
I know it helped. It helped my husband and I out. Actually, each of these types of loans, I feel like we can just really talk.
You can go so deep.
We can really get into it, because I heard a lot of things about the VA loan too. Other benefits, but like I said, this could be an hour on each one probably.
We can spend 24 hours on all this.
Yes. So Mike, we talked today so far about VHA, conventional, and VA. But in the beginning, we said there were 5 types of loans.
5.
Those are very popular ones. So there are 2 more out there, and I know that the one that I want to talk about next is the USDA loan. I have a great client who actually just brought a home with the USDA loan. This is her first home that she's buying. She closes at the end of February, and it was very exciting. Now, when I heard USDA, I think of farm and farmers, and it was like, hey,
acres and all that stuff.
I don't want to grow corn and peanuts. You know, I want to buy a house. How's the USDA going to help? But it does. So tell us about that, because that was a great option that I had no idea about.
Really good loan. Like you say, a lot of people, when they hear USDA, they think of farming and so forth, because it is suited towards the urban area.
Okay.
And USDA, it's a grant, 0% down. You don't have to pay any money. You don't have to come to the table with anything.
Okay.
You can if you want.
So the USDA, it's a loan, but the grant pays for the down payment?
Yes.
Okay.
Yeah. So it's just like VHDA, just like the first time home buyer. It's you know, depending on what kind of loan you're going for. USDA is just a grant that, you know, 0% down payment. And the only thing about the USDA is it's a little more strict because it's a grant. I think they underwrite their own files. You got to send it off to them. It may take a little longer than somebody like myself who can close quick. But it's like you said, it's a great loan. I mean, you can get closing costs paid for. Again, the only downside is the house that you're looking for has to be USDA approved.
Yes.
And we don't see that a lot in the 7 cities,
right?
Just because they're it's not herbal.
Yeah.
Or yeah.
There isn't a lot of land. I would have thought that Chesapeake and Virginia Beach would have had some areas. I'm not sure, but the client that I have, she's actually buying out in Cortland. So,
where's that? No, seriously, where's that?
Cortland, 58. Like you going to North Carolina?
Oh man.
Have you ever been to North Carolina on 58 to get to 95?
I'll be honest, my numbers on the routes and stuff.
Okay.
I confuse you.
I guarantee.
As long
Have
as
you ever been to North Carolina?
Oh yeah.
Then you've been past.
I trust you then.
Southampton County. All that.
Yeah.
Very rural out there.
Okay.
So, a lot of people out there. I don't know how many people use the USDA loan.
I mean, if you're out there and you're in an urban area, or if you're in an area that you're not even sure, you can look up on USDA.com or USDA approved areas. Type in a zip code and it'll literally give you a map of, hey, this part is approved, this part's not. Because I've had clients who got approved for USDA loan. They go find a house and the house is not approved, and then literally right down the street, it's approved.
It's approved.
So it's like and I don't know how they come up with their approvals or whatever, but it can be the difference between two streets.
Wow. Now, do you do USDA loans?
Yeah.
Okay.
Yeah, we do USDA loans. We 640 minimum credit score.
Okay.
And
how does this help the consumer? I think that it has some really good other perks to it. Kind of like, does it have anything to do with income or?
There are income limits.
Okay.
There are income limits as far as if you make a certain amount, then you can't apply for that loan. But
so
usually,
if you make too much.
Yeah, usually people who are over there aren't usually trying to get a USDA house because you also got to think if you're not bringing anything to the table, then your monthly payments are higher as opposed to if you would. So you take a USDA and you compare it to an FHA, your monthly payments probably would be a little higher just because you're not bringing anything to the table. The rates of those are competitive with all the other kinds of loans.
Okay.
But it's for the buyers who may not have money to put down towards a house, and meanwhile they're thinking, well, if I don't have anything to put down, I can't get approved. But that's those are the kind of loans that are out there for people who who may not have may not be that fortunate to have the funds to put down. As we know, everybody's different. And there's a loan out there for each person. It's all about how we're going to help you get to that threshold to get that loan.
Right. And I know it worked out really well for her because her payments were, I think they're under $1,000. She has really good payments, but it was tricky because her taxes couldn't be a certain amount to keep those payments.
Yeah,
it is a lot of qualifications. So if you're thinking about a USDA loan, get with a loan officer who, such as Mike, who can really give you details. Again, another loan that it has a lot of benefits. It has a lot of pros and cons to it. But it's a loan that could be considered for
sure.
some people.
I think it's a really good loan. It's just not taking advantage as much as it should
be.
Yeah. And it's just because a lot of people don't. That's one of those forgotten ones. It's like the ones that's like floating out there.
It's forgotten or either just didn't know because I'm serious. I was like, I don't want farmland. I want a house. When she came to me and said she had a USDA loan, I was like, girl, you gonna be doing some farming too.
Yeah.
But no.
I've done several down in like Georgia.
Really?
Yeah. They have a big USDA market down there
I would imagine so.
Yeah, and it's not even farmland. It's there's growing neighborhoods with just USDA approved houses. Yeah.
I need Chesapeake, Virginia Beach to get on board with that.
I don't know if they're ever going on board with that.
I don't know. I have to kind of Google it in. But yeah, another great loan for you guys to think about. Ask your loan officer about that. And that was 4. So our 5th one, again, another one, the VHDA
loan.
I don't even know where to begin with that one. I'm just going to listen all to you.
Yeah, it's a first-time home buyer program.
Okay.
So you got to be a first-time home buyer, or you can have bought a house in the past, but I think it has to be, maybe it's spitballing this, but I think it has to be 7 or 10 years from the time you bought a house, and then you can be reconsidered as a first-time home buyer.
Okay.
So first-time home buyer program, it's an FHA product.
Okay.
So the FHA requires the 3.5% down payment. The VHDA is a grant program for first-time home buyers that they will grant you that money.
Okay.
so you won't be bringing a down payment to the table.
What are the qualifications for that?
Qualification
Other than the first time home buyer.
640 as well on the VHDA, and you have to have at least 1% of the sales price in your account before closing. So they want to see that you, although you may not be able to make the down payment, they want to see that you have funds to make the first, 2 monthly payments on your own, and that you have some reserves out there just to strengthen their file and have some trust that, hey, we're granting you this money, so we want to make sure that you can at least pay it back. And you have to take a first-time homebuyers course and get certified. It's a certificate that you have to get to bring to closing. And all it is just a first-time homebuyer class that instructs how to pay your mortgage, what to look for within a loan officer, the things that they should do, home warranties, and just other things about the process, and just giving knowledge to the buyer on what to be looking for is your first time buying a house.
Which makes sense, because it's your first time buying a house. A lot of times, your first time, you don't know what to expect.
Don't know the questions to ask.
You have no
just
idea.
like, yes.
I'm going to get a house, I get a house.
Yeah. So it's, like I said, it's first time home buyer program. It's just basically that 3.5% that you would be paying for a down payment is granted. Now, the downside to that is, since there is a grant, you're paying on 2 mortgages. Because you're paying on the
grant back?
Yes, the grant is a separate mortgage.
Oh. So
a lot of people don't understand that either. Is although you're not bringing anything to the table as far as the down payment, that grant you're paying on the loan that you're getting as far as to buy the house, then you're also paying on the grant.
So you have to pay that.
Yeah, and it's yep.
I think for a grant, I don't have to pay it back.
Yeah.
and but the average consumer would say, "Hey, you're granting." When someone thinks of a grant, that they're granting me this.
It's not a lot. I mean, sometimes it comes out like $25 extra, $50 extra a month. But it's 2 different loans. Okay. So when I'm talking to the buyer, it's hey, this is what your monthly payment as a whole. But then once you break it down between the actual loan and then the grant, it's let's just say $1,200 on the monthly mortgage, which just includes the principal, interest, taxes, and insurance. Then there's another payment is just the grant 3.5% down payment that they granted you.
Okay. Great.
A lot of info there.
That is a lot.
Yeah.
I really wish that we had more time to talk, and perhaps one day we can go back and.
We'll be doing this quite some time. We'll be doing this a lot, so we'll try to figure something out.
Yes, I mean, amazing information. So we had FHA, conventional, VA, USDA, which is not just for farmers. But do farmers use it?
That's a good question. I would assume so.
Yeah.
I would assume so.
Okay. And VHDA, which is specifically first-time home buyers.
First-time home buyers. Yep.
All right. So, did anybody have any questions? Nope. Okay. All right. So, I really don't have any questions, but if you're watching this and you say, hey, I do have a question, or I know a lot of people are probably in the car traveling right now, so if you get home and you watch this and you have a question, please type that question in, and we can get to Mike and he can get you some answers on that. So
feel free to just shoot an inbox. I know a lot of people are shy too.
Yeah.
That's how I was when I trying to buy a house and stuff before I even knew what a mortgage was. Like looking into it and don't know what questions to ask, or don't want to seem like not intelligent or what. There's no stupid question, especially when it comes to something like buying a house, because you want to make sure that it's your house. You want to make sure your answers are answered before you get into it. So if you got a question that you don't want to pop up on the live, just shoot her an inbox, and I'm sure we can all talk and answer your questions.
So Mike, if they want to contact you about any of these loans, if they feel like that, hey, they might not even know that they're ready.
Yeah.
What's your contact information where they can get in contact with you?
Yeah, my cell phone number, that's all I have. I don't have an office number. It's 757-373-5105. And you can shoot me a text, you can give me a call, you can FaceTime me. I don't care. Just be ready to gain some knowledge and be ready to have a fun conversation. Because I don't like dry conversation.
Yeah.
I like to have some fun with it. It's a stressful process.
It is.
And I don't think a lot of people understand that until they get into it.
Mm-hmm.
So the more fun and the least relaxed you can be, and it just helps everybody out. It helps you just kind of put you at ease. And, all right, well maybe I am making the right decision.
Yeah.
Going forward, because it's stressful. It's stressful.
Stressful.
Or you can
It's a
Facebook
decision.
and all that other stuff.
Facebook, email.
My email is my first name Michael. That's MICHAEL. My last name Murray, MURRAY, and that's at OVM Financial. O is in Oscar, V is in violin, M is in Mike, financial.com. So you can email, like I said, text, phone call, do whatever you need to do. I'd love to help anyone out, whether you qualify, whether you don't. Again, just add some knowledge and some value to something that you could do or possibly do later down the line.
And I'll share your information with them
Please.
in a link later for them to kind of click on and get in contact with you.
Yeah.
And
Miss Demetrius Goodwin is up here watching.
Okay. Oh. So and if you need to get in contact with me, so the first step was to go see someone like Mike. Go call Mike, give him a call, and then when you're ready, come see me, Tamika Henry, your real estate tutor. And whether you're ready to buy or sell a home, my number is 757-343-4641. I am your real estate tutor. This is Mike Murray, and you've just been schooled. Have a good night.